Hello everyone, it's January 5th, 2018. It's 2:37 p.m. GMT, 7 minutes after the beginning of the New York session. And we had the US jobs data today. We had a webinar on this specific event. Now it's just a follow-up on the event outcome, and some market figures, account management, trade management, and so on. So here you can see my, first of all, regarding the results were more or less in line with expectations. So it shouldn't change the market sentiment. It shouldn't change anything in particular with the current market stats. So now I will just go over my account trade by trade, and I will explain what I'm going to do. First of all, the euro versus Japanese yen. Of course, I'm going to keep the position. My final target here is 145. This is the strongest resistance level, just below the strongest resistance level. The other position that I have is just hedging. Please don't look at this position. This is a very professional trading activity. I just look at the position that or the trade idea that I have in my account, and the trade idea is a buy position from 134,800. The TP point is 145. In the mid, we have a mid or half portion profit taking target around 138,500, but the final target of this trade is 145. And the stop loss is in the entry level. Okay, moving to euro versus the New Zealand dollar. Here the target is 160. Sorry, it's not the right target. 174, and here I will not change anything. I'm not placing a stop. The expected stop loss here is around 167, but for now I will keep the position only with the take profit point, and I will wait for the beginning of next week trading session when the US traders will come back from vacation, and then I will decide where I'm going to place my hard stop. Hard stop means that I'm going to place the stop in the system, and then it will be there for the market to decide whether I'm going to take the profit or the loss. Pound versus the US dollar. Here the pound is correcting today. It's a little bit strong, but yet it's around the trade range, 30 pips in the money. The stop loss is now at 135,880, and I will move it a little bit lower, above today's highs. Let's take a look at today's highs. Today's highs is 135,800, so I will just place it at 135,850, slightly above the highs today, and hopefully the trade will go down further and provide with some more profit. The final target here is 131,500 with partial profit somewhere around 133,800, somewhere around there. Okay, gold has been moving higher over the past 3 weeks, of course. Today it is correcting a little bit. I took a position yesterday at around 1310, and today we had a rebound, and after the economic data, jobs data, it bounces further and then retraced. Here I'm going to keep the position at the same level, profit level is around 12.75. Now, if we're going to have a breakout, I'm going to hedge the position. I don't have a stop loss yet. I will just hedge the position at 30.27. That's how I'm going to do it. Here is the order, new order. It's a buy stop. It means that I will not buy the position unless the market will break out above the highs. 127 is my buy limit order. Now it's just a protective position if the gold will break out further above our entry level and above the last 4 days highs. I will place the order now. Sorry, it's a buy stop. My mistake. It's a buy stop. It means that I will buy the position only if the market will hit 13.27. New order, buy stop, 13.27, which is above the highs. Okay, there it is. You can see the new line that was created in the platform. New Zealand versus the US dollar, I have two positions, one from 0.70 930 and one from 0.69 720. Both of them are out of the money. I don't have any stop loss yet. I'm waiting for next week, and then I will take a decision where exactly is my stop loss. I'm not afraid to keep the position out of the money. It's a small position with respect to our initial account balance, which is $10,000. Currently, we are 3.5% in profit, and I'm not worried from this trade. The New Zealand dollar is strengthened over the past few weeks, and it is again still it is overvalued in my in my view, and of course in our group view in FinMentors. Next and finally, the S&P 500. I have hedged position sell hedge position at 2,680 and 2,675. This is the hedge position. Currently, the only things that I have here, the only exit rate I have here is a stop loss or stop profit at 2,682 for the long position, for the buy position, because we believe that the market should retrace in the upcoming weeks. So as for now, we keep those two positions without any exit rates. The only exit rate here is the buy position at 2682. Now, yesterday I covered my long position, which we took around 2,691. I will just go over the closed positions very soon. Yesterday, I took another position to the downside. It was a very early trade at 2,721, and today I took another one at 2,733. These positions are going to be managed very tight because it's very dangerous. The market can break out further, although we believe that the market is going to correct over the couple of months or over the next couple of months. So I will keep these positions. Some of the positions I will cover. There is only one position that might that I might keep for the upcoming future. Not all these three positions. Some of them will be covered just for short profits. So the idea here is to take a sell position around the current price levels in order to make profits from the upcoming expected S&P 500 correction. All right, and now I will go to the account history. There are some small TPs here that we shouldn't look at it now. It's not a part of our trading activity. It's a part of a different activity, which is very professional, progressive, and if you want to learn about it, you can log into our advanced program, and if you're qualified, we will go over it. But I will go over the trade ideas that we already covered in the account. We opened the account less than 1 month ago. This is the long position of the S&P 500. A part of the position we covered at 2,705, and the other one we covered yesterday, 2,722.5. That's it, done deal. It's out of the market right now. This is the profit that we took here. And we had another trade on crude oil. We bought it at around 58.60 a few weeks ago, and or 1.5 weeks ago, and we took a profit, immediate profit, around 1 point in average. And the last trade, which was a little bit funny. Yesterday, we took a position on the Dow Jones. Now, 25,009 and 25,009 and 25,148, both of the targets to hit today. And it should be around $250 or more than $250, which reflects 2.5% in profit. It was already there, but a few minutes before the beginning of the New York trading session, I just protected my my position by putting the stop loss exactly at 24,950. And yesterday, before the market rose exactly to 25,150, we had temporary retracement exactly to my protective stop level, which is here exactly. Take a look at this low price, 24,950, exactly my protective stop point. So I just made $4 instead of $250, but it's a part of the trading activity. As long as it's positive, it's okay. Currently, we are at 3.5% in the money. Of course, we have running life and kicking positions in the market, which we are managing. Hopefully, we'll see some more profits during the upcoming months, during January. And we truly believe that we are going to see some nice profits after the last prints, and the sentiment and the market psychology of the beginning of the year. We are going to make some more profits. Most probably you will meet me again on Monday, where the New York traders will start their activity, and we will see volumes, volatility, and so on and so forth. So till Monday, have a great weekend, and I'll see you then. Bye-bye.